All right, session's being recorded. Thank you for attending. This is Clueless Trading. Frank, very pivotal night here. Probably one of the more historic nights that we're going to go through in our trading career. It's June 23rd, 2016, Thursday, approximately 8:43 p.m. 8:43 p.m. Eastern Standard Time. And that should be, I believe, that should be time-wise what, 1:43 in England? I believe it's 1:43 in England. Yeah, 5 hours, right?
Yep.
5 hours. Okay, good. Let me just put this on. I have Bloomberg on one of my other screens because they're having the live coverage, so we can be a little bit more current with the breaking news. They're starting to get the stuff from since June 23rd, 4:50 p.m. Eastern. Okay, good. All right. We have some more people coming in. Let me just take a quick attendance and then we'll go from there. Let me see. No, looks like it's the same. Jasco jump. All right, ladies and gentlemen, full disclosure, this is purely for financial education and not for any solicitation or advice. First and foremost, I want everyone to put this link on their computer somewhere so they can get the full coverage of what's going on a minute-by-minute basis, and that is right here, okay? Just copy and paste it and put it out there. What I'm going to do is I'm going to copy this and I'm going to put it directly on the public chat room. What the hell? 1 second. Okay. And I'm putting this directly on the chat room window so that, and I put this on the Twitter feed anyway, so you guys can copy it and put it on your web browser. This is going to be your friend and the most critical source of information you'll need between now and first thing in the morning tomorrow. The actual live results. So the last that we heard is that they're starting to get the results from Scotland up north. And I am going to take this off the screen. Okay, great. All right, so the simplest way I can put this in perspective, this is like the biggest soap opera that you'll ever monitor, period, okay? And every single county and every single town or whatever city that's going to be that the votes the tallies coming in is going to move futures by a minimum of 5 points. By the time we get done with this session, we could be up 20 S&P points, okay? And I'm not kidding. Or we could be down 20 S&P points, which we were a bit earlier on, actually, close to it. But it's all within a very structured framework of what you see behind you. I am going to take 110% credit for the fact that these charts were drawn weeks ago, and that is exactly what happened. I mean, you can't get any better than that. You know, I should sell this stuff to the big investment banks and these bozos who basically guided people completely wrong through every single move in the market. They kept people in the dark with the fear mongering, the all kinds of massive paranoia, and from a trading perspective, it kept all of us on our toes, less me than many of you, and left a huge, I'm not going to exaggerate tonight, huge amount of money for many of you on the table. You could have made your year in 2 weeks or whatever your goals are for the year. And today was a prime example of that. So what I'm trying to get at, before we delve into the actual facts of what's happening with the Brexit situation and the polls coming in, is that even if you don't trade during these times, or you trade little, or you do stupid things and you keep on losing money because you're not focusing on the stuff that I'm producing and showing and repeatedly trying to motivate people to be a bit more risk orientated with a certain with whatever their quantifiable risk amount of capital that they can deal with. Just at least learn something out of it. That itself would be a huge benefit to all of you going forward. If you have learned nothing about what the markets have been doing for the past couple of weeks, if not the past couple of months, then you are truly wasting your whole time even listening to me, and forget about trading forever. And I mean that. These are markets which are structured. They are structured by machines. That's the only reason why I can do my charts the way I do them. Because machines are very precise. So even between all the randomness that you see, okay, you see a very structured format that I put together in a way that people can make some head or tail out of it. And so what I'm getting at, and I mean this, okay, and I'm trying to help you guys, because I have no compulsion to sit here at 8:50 in the evening when I could be sitting out, looking out on the waterfront, having a nice glass of wine, sitting there, having a cigar and saying, what a frigging couple of weeks, man, and what a day, and what a week. And sit there and be P. Diddy and count the money, right? Well, I'm not like that. Because I do feel that all of you and some of you need some serious help. And I think if I keep on trying, you'll somehow get there. You'll somehow get there. But most of the effort has to come from yourself. So take it very seriously that the amount of time I'm going to spend tonight in explaining a whole bunch of stuff, which hopefully you guys will, that you guys will absorb. Because what's that saying? Everyone hears but no one listens, or everyone listens and no one hears, something like that. So it's the same thing, you really have to get into this. And you don't need to be a rocket scientist. I hear sometimes people say, I don't understand your charts. Okay. What more can I do? Like have a moving hand over the charts and say, okay, buy here, sell here. I mean, I'm showing actual tactical levels with big fat kindergarten arrows and ranges where you can buy it and where you can sell it. And 90% of the time it gets there, or more than 90% of the time, it gets to exactly there. If I had real manpower, I would basically shove every single chart. And at one point I'll do it. And every single options chart, just to bedazzle and shock and awe everyone on what they didn't do. Options going from 2 to 10 to 12. S&P calls going berserk. I pleaded with everyone to buy these things. RUT calls, the 1170s, they opened at $3. I asked people to buy them around that same level, like 4 or 5. They went to 13. I'm sorry, these are the Russell calls. The 1160s went from 8 to 19. The S&P 500, 2070s, 2100s went from 14 to 26. So you know what? I'm just laughing. I'm laughing at and honestly, I'm not mocking anyone because I'm not that type of guy. I have no desire to mock anyone because I have nothing to gain. I want all of you to make money, and all of you to tell your friends to join us and get huge in a huge community growing. We have a decent science community, but I'm just saying, like, staggering numbers. Chipotle 2 days, 3 days ago, I give people showing the moves. The calls, I believe, were like $1 and change. They were the lottos. That went to $11. That's 1,000%. Some of you did it. I did it. I took some out. I left some. And I dumped them today. A little bit early before they took off. Doesn't matter. It's still huge. Don't always have to wait around till the last minute. Goldman Sachs. one bad day, everyone's just freaking out. Oh my God, So you guys gotta take yourself seriously. Honestly, all of you have to look at yourself in the mirror and say, what the heck am I doing? Because I do that, okay? And you gotta scream at yourself, rip your hair out, because honestly speaking, if you keep on doing what you're doing, you're not going anywhere. You're not going anywhere. And the worst feeling in the world is when you know you could have done it, it was right there at your fingertips, and you did something stupid along the way, sold it because you're not focusing on the things I'm constantly trying to showing, that upside intact. Do you think I just write that as a nice little term, upside intact? This is not the first time. I said upside intact maybe like 40 times. And where do we go? We went exactly where I showed. Did I make up these lines? No. Look up every single chart. So when I find people not focusing on the charts and not really having the discipline or the thing and making stupid comments and this and that, I just, what do I care? The biggest punishment any trader can suffer is their own stupidity and the fact that they're losing money and not making in these type of markets. And these markets are going to get very difficult, both on the long side and the short side. If you think you can look at prices and make money, well, good luck, without understanding what's happening underneath the surface, which I constantly keep on harping on for people to focus on. Because if you don't look at the internals and don't understand them in a simplistic way, then you're either really like an ostrich with the head stuck in, and while somebody shoots you, the head stuck in the sand while somebody shoots you, or you're just plain stupid. And I'm sorry, I have a low tolerance for stupidity. Because in my opinion, nobody's stupid. They just don't work hard enough. And I said that to a member here who's listening, Nobody is in life is stupid. They just don't work hard enough, because the brain is a muscle. You got to work it. You got to work it. And then if you, after all the hard work and all the focus and stuff, if you still can't make money, well, at least you tried, and you'll make money. But at least you tried. But when you don't even try and you just kind of like swim through, oh yeah, stock's going up, oh, kaboom moment, oh, it's going to keep on going higher, and all that garbage, right, that I make fun of and say, atypical retail behavior. You're going to constantly do the stupid things. So as a friend to a friend, and I'd say the same thing if I was sitting down having a drink with you guys, okay? I'd say the same thing. I say this to myself every day, and that's why I am where I am, because I did behavioral modification, but I was always a bit of a risk taker. So you got to be a risk taker, right? So you have to be a risk taker. If you can't be a risk taker, then don't trade. You want full safety, I don't know what you should do. You should put your money under the mattress, or go and put it in a money market account, giving you 0.0000002%. I'm kidding. Well, something like that, right? By the time you pay your taxes, you're actually negative yield, negative interest rate. So the point is that you are fooling yourself and deluding yourself into thinking that you can have a low risk type of safe environment where you can make the big money. You want real safety, moderate safety, you will never make the big money. But that's fine. It's up to you. What do you want to do? You want to make 100% return on your money in intraday, which we do consistently. And no one's saying to go out there and put your whole trading capital in there. Take pieces of that. I can show you, at one point I will, test accounts, a couple of $1,000, which have grown into sometimes fat 5 figures. High risk money. Put it in there. Are you going to have losses along the way? Absolutely you will. But losses can be mitigated within a matter of 1 to 2 trades. But for that, you need to walk in there and say, this is it. I'm going to make that up. I'm going to make double that back up. If you don't have that type of attitude, you're not going to make that loss up. Because remember one thing, everybody's scared. I'm scared too. This is hard-earned money. This is not money Uncle Sam's writing to me. or Uncle some sheik is writing to me, or some fat bloated guy in Oklahoma is writing to me, some oil man. This is real hard money. So the point is that while you listen to me, watch the futures and watch, they're down 14. So everyone's scared. But when you're going into a trade with a conviction and look and I don't go into trade just for fun. I go in, I take a very hard technical look at what's going on. I analyze the environment in my head, whether or not it's doable, and some sort of predictive gut feelings where I go in. And many times I go in against the grain. So once you do that, then you'll win. But if you go in all scared and really terrified, almost guaranteed you lose money, even if it's going your way, because you do something stupid. So that's it. So after this particular evening, and after what we're gonna preachers are down 20. Nice. So 18. So the bottom line is, you all better wake up. This Brexit is not for just the residents of the United Kingdom. This is for all of us, and especially for all of you, for a wake-up call. All right? Real wake-up call. There are people in the membership area, and I'm going to get into this in a second, and just watch how precise the channel is. I didn't make up these channels. I drew them weeks ago. So let me remove this drawing. Look at the correlation between the channel, and you think I kid around when I say stochastic resets? Look what's happening here. This is a 1 hour chart. Look at the bottom of the channel. That's exactly where it went. We break this. We'll go through this in a second. So I lost my chain of thought. So the bottom line is that there are a lot of members, been with a long time, and they will just not. They're so stubborn. They will just not do the advanced coaching sessions or sit on a free market update webinar and really understand or try to engage and learn and focus. There are new members here, I won't name names, who are so enthusiastic to learn that every day they ask me, hey, when are you having the next advanced coaching session? I like that attitude. I'm having it this weekend. I couldn't have it because of Father's Day, and then the week got really busy, real busy, as you can tell. But I'm doing this, and I'll do it over the weekend. So that's the kind of attitude you need. And others that just sit around and they're like, oh, well, I understand his chart. He draws fat arrows. Loser's game, okay? Because there is a dynamic going on between all these lines that over time they will start to talk to you. And more often than not, you will win using that method than lose. So, end of story. But to all of you who are attending, I thank you because it shows some commitment, maybe shows some real fear, because you don't know if you're going to wake up tomorrow morning with the market down 400 points and ready to get halted. So do you want to know what I think? Well, I have news for you. I won't tell you. We'll just wake up in the morning, all right? So that's the end of the session. All right, all kidding aside, let's see what's going on here. The good news is that only 16 out of the 300 polling stations have reported so far. We are seeing massive volatility in the currency markets. This is the front end of what's going on. Underneath this is the currency market. These channels were drawn weeks ago, as you know. And look what the frigging market is doing. So I'm like some sort of Greek god here, which is controlling the fate of the Western civilization in the form of e-minis on Brexit evening. Look what's going on. This is starting to turn. Technically, I can show you the structure where I think the markets can come to before they have a technical bounce and stuff. But keep in mind that if things go really nutty, technicals don't matter. Okay. So the good news is, like I said, I think 14 or 15 of the polling stations have reported, and it seems like a very close if not a slight majority, for the Leave campaign. And that's the reason why you're seeing this lovely candle. 1, 2, 3, 4. All this selling is also being forced by large-scale liquidations right now going on in the currency market in the form of a first initially, this is what happened. I went to my son's graduation right after market. I ran there. I was running late. I run the PTA there, so I had to say some nice words and give out a couple of nice checks to the valedictorian and all that stuff. I rush back. I look at the screen. I'm like, what? Everything on the screen was up $5. Because I don't know if you guys were sleeping or if you guys were tracking, futures went up like 20 points, I think. They went berserk on the initial polling. What I'm getting at, we have a maniacal situation going out in good old English town, all right? England. There we go, down 24. So then right after that, the polls started coming in and everything reversed. So right when that happened, the British pound shot up like crazy. And right now, it looks like, and then the Japanese yen did a huge reversal. So all these are very interconnected. What you're seeing in the front end with S&P 500 is simply a reflection of what's happening with the currency markets right now. So here you're looking at, oh, come on, stupid VIX keeps on coming on. Hold on. Okay, here's the Japanese yen. It's in full-scale collapse mode here. Now, one thing I want to remind people as we go along through this thing here, the world doesn't end tomorrow, okay? And once you reach some very critical level, in the case of the Japanese yen, it's between 100 to 102 yen versus the US dollar. You get massive intervention by the BOJ. And you got that earlier on today when we, winning this evening. Oof, 1 second. There's so much data coming in. My screens are starting to act funny. Hold on. There we go. There we go. This is what I was seeing earlier on. So when at 5:17, I'm sorry, 7 o'clock, 7:17, you got that. Look at this. Huge. So this is the Japanese yen, as you know by now, weakening against the US dollar. It came down to a low of 102.9. Boom. Short covering, massive Japanese intervention. This is the Bank of Japan intervened here in a big way. Billions bought in seconds, okay? So they intervened and it ran up, moved around sideways, and now it's doing this. If somebody asked me, well, what do you think? If I was a currency trader, I'd actually be a great currency trader because I pinpoint these levels very, very accurately. I would pretty much say, okay, it's going to come to the first break of the candle here, also the lower end of the Darvas at 103.93. By the time I finish speaking, wow, futures are down 40. Oh, now it's getting there, okay? By the way, just so you all know, and I hope some of you did that, I hope you kept some hedges for this type of thing to happen. And secondly, I hope you all lightened up your positions, at least the trading positions, to a large degree. Because the swing positions, you'll get some massive buying opportunities. But if trading positions and weekly calls and stuff out there, you're toast for now. With this 40 can turn around being up 20. So like I said before, listen to what I said. Only 15 to 16 poll stations have reported. There are 320 in the UK. The biggest one is London, and London is primarily in the Remain camp, and that's got the largest population. And that doesn't come in till 2 in the morning. Okay, so this night is early. So I'm gonna sit back and wow, futures are down 43. I think those little hedges are going to look fantastic. Can I ask you a question? And I'm not pointing fingers. Does anyone have any hedges for tomorrow in the form of the ones that I gave out in the SPYs and SPX? Anyone have any?
I don't know.
Okay, I'm not asking for people who don't. I'm asking for people who have. Does anyone
I have some.
Okay, you have some in SPYs.
Yeah, 3 for the weeklies at 210.37.
Okay, I don't need to know details because I don't care. So those 210.37 that they opened up right now would be $20. Who was that anyway?
Pasco.
Oh, Jessica. Okay, good. Hey, Jessica, what's up, brother? And good, good. So and Tesla is going to be down $7, and I kept every one of those puts. All right. So, but then the swing position and stuff, those are But anytime you have a market dislocation, and I've gone through quite a few. All right, on the cockpit, on Wall Street, including the May 2008 flash crash. So I've gone through quite a few of these things here. What you're seeing here, and okay, this is directly. Let me put this right next to the ES. Wow, 52. Let it go, I guess. So right now they're taking out all stops, and this has also been propagated by Asian stocks, which are also falling pretty hard right now because the Japanese yen is doing what it's doing. So it's all it's all interconnected. So we're just going to watch this. 1 second here. So we're going to put this side by side. So why people don't have a few hedges, I just don't know. It's just, in my opinion, I told everyone very, very clearly, lighten up your position, take profits. I didn't say panic and go on the ground, but it's clearly posted all the way through that look how fast it moved. Look, the intervention. You're watching Japanese bank, the Bank of Japan intervening right now. Look at that. Look at that. This is billions of dollars going in there. So this whole green candle is BOJ intervening right now in the currency markets, and you're seeing that on your screens. Let me just put this here on the 5 minutes so you can see the real action here. This is us right now, right? 2120, 2064. I did mention for people to buy, I believe, the SPY 207s. So pretty much I looked at my charts and I said, okay, that looks like, on a real fallout, that's what's going to happen. But there's no guarantee. When I wake up in the morning, they're all, futures are up 10 and, it doesn't matter. Because honestly, I'm not making fun of it. This is exactly the way it's getting played out here. There's a lot of movement going on here. And as long as this stabilizes, the Japanese yen, then this is going to stabilize very, very quickly. Very quickly. But the Japanese yen has to reclaim back right here, 104, if not 105, for stabilization. And I can assure you, they will stabilize the markets. There's way too much at stake. Like Jasko says, don't mess around with the central bankers. They got a lot more money, and they can print money, and fighting them tooth and nail is a losing game. And Soros and Icon and these guys, these big hedge fund managers, do not have the firepower if there's a coordinated effort, which I have seen quite a few of them in my career, where they come in and support financial markets because there's way too much at stake, and so societies are at stake. So what are they going to do? Just sit around on the sidelines and say, okay, Soros, I'm going to make you another $3 billion richer? For a socialist, he's one heck of a capitalist, I'll tell you that. But so anyway, so now I'm going to get into where the S&P side, and I give you an idea what you can expect. So I'm going to try to pull this screen from the top screen here. Hold on. One thing I'll tell you, the run-up at the end of the day, unprecedented. Anytime, and this is something just you all know, anytime you see the run-up like that, like we saw, and that's when I was rushing out to my kid's school. My wife was already there. I just don't like it. I don't like crazy run-ups. You know that. My biggest money is made when there's, not necessarily these type of tactical bottoms, But when we get these nice fat retracements, and I find things to be reasonably, cheap, not on a fundamental basis, from a trading perspective. I don't like those run-ups, and I'm happy with what's going on here right now, because honestly, we go up another 50 points. I would short the market like nobody's business. And here is the chart, and look what's going on. You can make these things up. I drew these charts. You guys know that. I've shown this to you guys. Look what's going on. Here's your rising wedge right there. Try to make it a little bit. Wow, the screens are shaking. So it's like that's what happens, when too much data is coming in. I'm not shaking the screens. Oh, I'm sorry. My knees were trembling. Just kidding. Okay, let's see. Okay, let's keep it like that. So right now, yep, we're testing the bottom and we're looking. So what I can see here is we will find some major support at around 2030 S&P. Shown this before, okay? Because what happened at the end of the day today, that in one full candle, there must have been like a program that just went wild. Really, because you don't see a run up like that. I mean, I showed it on my algo charts that if we break that slight bull triangle or so intraday, we would run, but that was just it's too much. So right now we are from a pure technical, let's say from a technical standpoint, none of this Brexit crap was going on, and this was just a standard big fat reset. Well, this is what it would look like. So this is a daily. If you notice, I didn't harp out there and tell people to buy, go into that, because I like to follow some discipline on what I see on my charts. And what I saw today, that by the end of the day, we were at almost 100 on the stows. You don't go chase the market at 100 at the stow, other than maybe picking up some selected stocks and stuff, which could be a potential buyout or things like that. But if you're playing momentum stocks, you don't go nuts. You don't go nuts buying a bundle at these levels. That's suicide. It doesn't mean that it can't stay up and keep on going higher, but the stows are not the only story. Look where we went. We went straight up, right? We went straight up and we hit the upper end of whatever I was trying to show for days now. So in one fell swoop, when you get a move like that, and then after hours you hit 2120 on the E-minis, you just don't do it. So right now we're getting one fat reset. This is the fastest reset I have seen in my life. I'm serious. Where the dailies are getting reset as we speak. As we speak. Futures are down 43. You can see that here, moving right here. So in one fell swoop, within, I'm telling you, there's too much data coming in because the screens are very sticky. So let me show you this here. And all this makes sense to me. So all this makes sense to me. And as long as we hold this level here, and you guys all have to track the futures. You just got to do it. If you don't do it, you're just, you just won't know what's going on. Simple as that. You're being stupid. It's very easy to track the futures. So if you break this level here, which is, I'm going to draw a big fat line, the whole trend change game comes into play. There. Okay. So this level here, to me, which is roughly 2020, comes to about 2025 or so, and the S&P 500 would be considered a line in the sand, because at that point you can't in any way or form kind of make a credible technical story like it's a dragon bullish, which by the way was close to perfect. Did you guys see that? And if you didn't see that, then you shouldn't be listening to this webinar, honestly. Okay, I posted it, I showed it, and where is it again? Hold on, I'll pull it out here for. So I'm asking a straight question. Did you guys see that? It was posted at the end of the day. It was posted at the end of the day, and it said SPY, end of the day close, pre-Brexit, as forecasted and alerted. Just be truthful. Say, no, I didn't see it. And you know, and I'll throw you under the bus. Did you see it?
I saw it.
Okay. Jasco, did you see it?
I did.
Okay. Jeremy, did you get a chance to see it? I know you've been busy and stuff. I'm not, this is not a class like, you know, where I say, oh, you didn't see it, so you're a bad student, go stand in the back of the thing. But what I'm saying is I purposely put the end of the day thing so you guys start to, your eyes, your brain starts to register, starts to register, like, you know, and it all starts to fall into place. It's just like any other thing, right? Practice makes perfect. You know, I see charts so much more clearly than what I did 3 years ago, 4 years ago. Now I look at it, it's like, okay, I can make a sense out of it. So this is the one that I'm talking about, okay? And this was based on not just this chart, this was based on many other things that I was looking at, including what Mary knows well, which is a swing 533, which was showing that that we wanted to move higher on the short term. Until this happened, the histograms were actually going to go positive, but we don't know what's going to happen tomorrow morning. So, you know, maybe they will. So here was the one that I'm talking about. So the dragon bullish formation was shown like this. Now, when I drew this dragon bullish formation, believe it or not, we were down here. Now that's called predictive analysis. All right. And I will, on this one, I will take credit for it full blast, because this was done when it was here. So somebody could say, well, an untrained or whatever, somebody who's very dogmatic or this and that, you know, they're like, well, you know, why do you say that? Because, you know, it looks like it's just going to fall apart. Well, things just don't fall apart. Okay. Here I was following a very simple theory. We were deeply oversold. This has been a strong support level. This line was drawn a while ago. This was a level that the market basically had. It showed points of some type of inflection or support. In this case, a breakdown inflection, then a move up. So whatever the case may be, to me, given all the circumstances out there, the negativity, the all kinds of deep Brexit fears, don't forget that the Brexit talk was getting to be like extremely vicious. So it looked like a dragon bullish. And lo and behold, we hit the upper end of the channel at the close. Incredible. That is incredible. I was impressed myself. I didn't think it would happen this fast. So we're right there on the second channel, and right now we are doing this. Okay? And we better hold this. If we don't hold it, it's not the end of the world. It simply means we're going to come down and test 205 again. But at this point, it's a free fall, but bouncing. So I'll show you where I think the markets will hold. So that is a dragon bullish formation. And all of you new members, and thank you for coming and joining us. I think it puts in new blood is good. You know, love you guys being here. Is that this is that W formation we were talking about on the Sunday session, which everyone should go visit. I was a little bit surprised that there were fewer views on the introductory webinar, Back to Basics. In fact, every single old member should listen to that one, because we went through some very important chart patterns, selected ones, not all of them. And we talked about some basic stuff which everyone should be reminded of, because they forgot what the basics are. Anyway, so this was done, and this was done to perfection. So when it gets to a certain level like that, I don't chase. Okay? So Vic is saying, I don't know anything. I just took profits on my call side and just took some short in the money puts for next week. So what do you mean you don't know anything? You've been around us for a while now, Vic. So I don't quite understand what you said. If you tell me that after all this time you don't know anything, then you need help. Maybe you need, you know, some mental health. I mean, seriously. That's a silly statement. Yeah, you're going to make some money if we open up here very nicely. And it's a smart thing that you did, taking money on the calls, because I've been telling people to take profits off the table. So, but don't start off a sentence. But Vic is talking to me and he doesn't have a microphone. He's saying, well, I just followed your alerts. Well, you keep on following my alerts to that point. You're going to dig yourself into a hole if you say that you don't know anything. You got to use your brain too. There are people who have gone against some of my alerts and actually made ton of money over the short term. Maybe I was right overall, but they made money, trading the other way. So never say, oh, I just followed your alerts. And so basically when a member talks like that, and Vic is a nice guy, I'm just saying, he or she is basically saying, I don't have a brain. I pay you 60, 80 bucks a month to borrow your brain. You never want to trade like that. Okay? Seriously. Just don't follow my alerts. Try to understand the charts that I'm putting out, not to be a specialist in it, but understand it to a certain degree. And I think this comment that I'm making is extremely important for everyone to keep in mind. All right? So I know Vic didn't mean it like that, and I'm not picking on you either. But don't make comments like, well, I didn't know anything. You know a lot, believe me, more than you know. So let me get back to the charts again. By the way, congratulations, but I doubt if we're going to open down 30 points. We got another 250 plus 70 counties coming in or whatever from England. So if England remains in the Brexit doesn't happen, the futures initially will bump up hard. Just a relief thing. So this is that drama that's getting played out in the background. So looking at this here, as you can clearly see, this is what the real monkey on a hot tin roof looks like, right? There's a monkey jumping. So this is what's going on. This is the uptrend line drawn a while ago, as you know. This was the point of monster reversal. So that's the reason why I put the uptrend line like that. You can also draw an uptrend line, which is steeper, but I like this one. And I've shown this. So look what the market did. The market came, pierced it, and now going back up again. What is very important, in my opinion, from a standpoint, and not just a one-day thing or two-day thing, that we try to hold, we stay within the uptrend line. If not, the lower Darvis is 2040. The SPX is not real time, so I can't really show you on the SPX. So 2040 is roughly 2047 on the S&P 500. Very critical number. You can write that down somewhere. And then this massive thing at 2020 or 2019, which is 2025 on the S&P 500. Below 2025, trend change, or at least the structure is broken. You cannot call this a... Bulls can do this too. Look, they can say, sorry, let me show you. Okay, went up, we came down, went up, and let's say we crash down here. So if it holds within that, within this range here, bulls can say, okay, this is a massive multiple dragon bullish range trading formation, right? But below the 2020 level, this range is broken. So that is the point where I believe a lot of selling comes in. A lot of selling comes in. Now, 2020 from where we are right now, we're at 2070 right now. 2070 is 50 points. So 50 times 7, that's it, roughly 350 to 360 points. Vic, don't worry. I apologize. I didn't mean, I wasn't picking on you and stuff, but look, I'm a very passionate guy. So when I hear a member saying that, and I know you didn't mean it, I'm addressing Vic here and all the other members, I have to correct it. You can't tell yourself, you tell your brain you don't know anything, you will never know anything. But I know you know a lot, but I know you didn't mean it like that too. So end of story, all right? So good man. Okay. So bottom line is that at this point, this is the range that the market's trading in. The next thing that you all have to watch for is the moving averages, all right? I've said before, and I say it again, and now it's more important than ever, is the 50 and the 34-day moving average, which are converging right here. And look how the market is fighting real time. You're seeing a real-time WWF somewhere out there in, or WWF is for little boys. I mean, real, let's say Thai kickboxing or something, or gladiator style, right, where they really knock you out, and not just throw you around for TV. So they're trying to hold this 50 and the 34. You notice how that's going on? Can everyone see that? Right there, right there. So I can put this dot here and tell you that they will fight whatever it takes till futures are now only down 25. They were down 47. So the funky stuff, I bet you on the other side, you're seeing massive intervention by the Bank of Japan right now. And there will be massive intervention by our Federal Reserve too if the dollar goes berserk. And that will be on the sell side. UK, the Bank of England will intervene if the pound collapses too much, in which case we should book a chartered clueless trading jet. How about that? You know, from NetJet or someone, and go and fly to London, have a good time, right? And because if the pound goes to parity, let's say dollar to dollar, imagine that. The euro can go to parity. In my opinion, the euro should go to parity. So that would be great for trips to Europe. So this is what's going on here on a technical basis. They're fighting and they're working nicely. Look, they're above the moving averages. So when you look at the overall picture right now as it stands, serious stuff, nothing changed. Nothing changed. Futures down 23 points. Clueless air trading saying nothing changed. I mean it. If pure technical robotic discipline, nothing changed so far. Things will change if we break below here and we break below here and we break below here. Then all kinds of different support level comes in, and the next level of critical support comes in. And of course, I'll be there to let people know that way beforehand, and we'll make a ton of money on the short side, is looking at the market at around 1950 or so on the S&P 500. Because one thing I do, and I've seen this happen over and over again, it takes time though. It doesn't happen in one day. Just when you think the market's going to go, it doesn't, right? That's because the internals never changed. But when the internals do change, this breakout level, this was a monster dragon bullish formation, right? Everyone can see this? Monster, right? So this breakout level is critical. There's always a bunch of volatility candles right at that breakout because they're not sure if they want to break out, but what happens, this and that. Internals were telling us it was going to break out, and that's exactly what happened back in February. You didn't hear any of your other services, I'm sure. You didn't hear the media for sure telling you that this was the real deal. We said it here. Don't believe it? Go look up my video cast from that time. Once you break out of these type of or dragon bullish formations, there is a tendency in critical times to come and test that breakout. So I'm prepared to think that by, who knows, by, I don't think it's going to be July, but by maybe July, maybe August. You know, the doldrums of summer and then coming September, all the worries about the elections, all kinds of stuff, that we come back and test this. Can we come back and test this? But if anyone who's really dogmatic says, no, it's going to happen within the next week, you know, everything's falling apart, there's Brexit, there's Brexit, you know, the Canadian exit, you know, out of what? I'm not sure. But there's Brexit, like German exit, all kinds of garbage, you know. So rumors are dime a dozen, right? Conspiracy theories about this and that. So whatever the case may be, testing this 1950 and the breakout level is almost mandatory. So it will happen. Okay? It will happen. Now, when exactly happen, we don't know, but at least technically I can say that if we break 2020 or so on the S&P 500, which is roughly 2015 on the E-minis, the chances of this happening rises. And it's going to be very fast, and it's going to be furious. And everyone's going to say, oh my God, that's it, it's the end of the world. It's not, because once it hits there, it's going to bounce. It's going to bounce and try to reclaim back the 50, because by that time, the 50 and the 34-day moving averages, let me clear the screen out, and let me take the thinner pen, would have started to curve down. So what do, somebody tell me, and I know some of you know the answer, what happens when you deviate too far away from the moving averages? What's the term called?
Reversion of the mean.
Right, mean reversion. Mean reversion. Hi, Corey. So mean reversion. So when you have mean reversion, you go try to test the backside of that thing. Now, if that becomes your resistance at that point. Okay, so that's exactly. So when you start to curl down, I'm giving you the bearish scenario in the months forward. If you see this thing starting to curl down, and I'm on constant watch for that. It doesn't happen in one day. It takes a bunch of days, maybe it takes a week. Then if the market just falls like this, it is going to try to get back to the, like reversion to the mean. And those are big money trades. Those are big money trades. And somebody might say, hey, listen, this was the head. This is the left shoulder. So now looks like we're creating the right shoulder after overshooting it. That's a plausible scenario. I'll take that. So if that's a head and shoulder, then we're coming down to the neckline. The neckline is around, the neckline is actually, yeah, take it at around 2030. So 2030 is your S&P neckline on this large head and shoulder. I'll draw this out. And all this, can make you a lot of money. Now somebody says, oh, it's definitely a head and shoulder. Well, how the heck do I know it's a definite head and shoulder? I try to short the market on a swing basis and I've lost chunks of money. I've made money too on the short side. But if I've held them for a couple of days trying to go against the grain of the market, it doesn't feel good because the machines keep on pumping harder and taking markets higher. There's a simple reason why. The amount of notional value of shorts, I believe, is more than $1 trillion or something crazy, right? Out there. So if those shorts are short, the market is a tough time falling apart because the shorts cover. I hope you guys understand that concept. So it doesn't matter what technically I'm seeing. Different candles will appear to go the other way. And that so-called swing short never materializes. That's just been the case on a rising market. But a bearish scenario, which I'm explaining right now, and again, we try to be tactically neutral. Let's keep it, I don't think the world ends tomorrow, but I believe in big tactical drawdowns. Seen it before, so why shouldn't I? So if that's the case, then this is the left shoulder. And if the market, let's say, stops here right now, see how it's defending the 50 and the 34 and the trajectory of the 50 and the 34 and the incline, the angle is still the same. I don't see it turning even after this drop. I mean, this is all what do you call, mathematical, right? Algorithms which are running this thing here. So I don't see the lines turning yet. And I'm going to actually zoom in so we can follow what's going on. 1 second. I'm going to just zoom in like this because this is the part of interest. This is the zone of interest to us. All right. This is the zone of interest. Rising wedge, nice consolidation channel, breakout. Once you see a candle like that, kind of, I've repeated 100 times, do not mess with the market. That is one heck of a reversal candle. Was notified on my service last week. Did play out exactly the way I think and a little bit more. Played out a little bit too fast, too quick, like what we saw today. End of the day. So, saying all that, right now, the different formations in place. So let's get directly into technical analysis here. First, I'm going to explain to you the head and shoulders. Head. Head. Left shoulder. Wow, look at the screen shaking. And then right shoulder here. Neckline. Neckline. So is it possible that we come here, just the way we did here, and bounce again? We could do the same thing. We could bounce, then bounce again, and try to create a triple top. But this is a double top right now, right? This is a double top. We could create a triple top, which if it fails is probably the big one coming, the August one where we get down towards the 1900s. Who knows? Whatever the case may be, at this point, this is your neckline. You could look at this as a wave pattern. So it's possible that the wave can come down here. We'll see. We'll see. In the meantime, here's another scenario that I wanted to show. Okay. if the body of this candle closes, let's say here, and the futures, futures are only down 19 right now. That's a vicious move up. So you can see that, bear with me 1 second, and I explain the body of the candle so you guys can follow that too. Look at this stuff. This is me playing after hours stuff, right? Remember Buffalo Wild Wings? Dropped like 20 bucks, bought it at the lowest, was up frigging 15 by the time all said and done. That was a $35 reversal. This looks exactly like an after hours trade. This is an after hours global macro trade going on in front of your eyes. Look at the movements here. Okay, so futures traders are either getting creamed, or some of them are obviously making some money, because it's pretty obvious that when you see a reversal candle, you're going to, go long. Whatever the case, if at this point, and this is one thing you'll have to know, at this point, ladies and gentlemen, if we break on the E-minis, and you all have access to the futures, right? On your platforms, I hope. Anyone who doesn't? Everyone has it, yes?
Yes.
Okay. Anyone who doesn't have access to futures on their platforms, the ES? Good. Everyone has. That's good to know. All right. So here is what developed in front of our eyes as I started this webinar. This is your line in the sand right now, ladies and gentlemen. That is a floor. A hammered reversal candle creates a floor. If that floor breaks, we're going to be down a lot. Okay? So at this point, we have a complete V-shaped recovery in motion, and the V-shaped recovery will stall at this level where you're going to see some profit taking. It's just standard procedure. Standard procedure. We'll pull back a little bit. Engage this. This dotted line here is something that I use, and many of you might know. It's called a VWAP. It's used by institutional traders. And if you want to know the actual definition of a value-weighted average price, then please, volume-weighted average price, go ahead and just look it up in Investopedia or on Google. Prices like to track the VWAP, and if you notice, it hit the VWAP right now. It hit the VWAP right now, and it's pulling back a little bit. All I know in my simplistic brain is if we break the lower end of this Darvas and this point of large reversal, 2049.5, then we might be in for some real trouble. Now, the other thing could happen is this could happen. Maybe a little slippage, and then a move up. A double bottom from a technical standpoint, anytime I say double bottom or whatever on a major stock, you have to respect it. Yes, it might slip and slide around there, but if it's a definitive double bottom, it creates a very, very, very strong floor. All right. The other thing, which I never mentioned before, just so you know, anytime you have a reflex move, right? This is a waterfall decline and a symmetrical reflex bounce, right? Generally speaking, on a large drop, and I'll show you something neat, you use the Fibonacci channels. You can do that with your stocks too. On a large drop, you generally get a 50% retracement bounce. Many of you know I use the Fibonacci retracements pretty effectively because I don't know where the stock is going to bounce. But when these things all fall into place, over the years, I've seen it happen over and over and over again. You want to use it. You want to use things that work. So I'm showing you some of the tricks of the trade. So you take the Fibonacci retracement. We were here at the top. You grab that and you go like this. Perfect. Like I pinpointed the Fibonacci retracement on CMG, just to give recent examples, and many other stocks. What was the other one that I used? And it hit exactly that. Oh, Goldman Sachs. So anytime there's a waterfall decline, okay, listen carefully. The 50% Fibonacci level is considered to be a critical mark where if it bounces and bounces over it, it's considered to be very positive, right? So here's your 50% right there. Look what the futures are doing right now, real time. It's like live trading, right? So the first level of engagement will be the 34-day moving average right here. In this case, 34 SMA. It's a 5-minute chart we're looking at. And then, of course, the 50. Now, what happens over the 50? We make a beeline towards the highs. So as you can clearly see here, there's a whole bunch of things happening in the background, and we'll look at that in a second. There's big time Japanese and a currency market intervention, maybe by the Bank of England, definitely by the Bank of Japan. The Federal Reserve is all, they're out for the night. They're monitoring things, but they're not intervening, believe me. And they're letting the foreign banks do the job. And then you are starting to see the poll numbers come out. Remember, I'm sure by this time maybe 60 of them have been, when I started the webinar, there were only about 15. By now, maybe 40 have thing. And of course, there's another 260 left. So Remain could get a wide lead because the futures are moving based on whether Remain or Leave camps, who's getting the lead where, right? That's the only reason why futures are moving. Now, you wonder in a rational world, why should they move like that? Well, it's not, because this makes money. I mean, the biggest secret, the myth about, see, the best kept secret on Wall Street is, or I should say the most widely publicized secret, is volatility creates money. I mean, do we really need to have this volatile markets? No, we don't. But volatility creates markets, currency traders get commissions. Hey, that's just the way capitalism works. You create volatility in order to generate fat commissions. So when people come and say, oh, the vol is so low and this and that, everyone's complacent, that's hogwash. Okay? People are scared stuff. They don't invest in the markets. You're telling me they're complacent? I mean, yeah, a couple of traders, they're trading the markets here and there. Hedge funds are dominating the market, and the algos are moving things around and adjusting things around just to keep people on their toes and make a couple of pennies on the side. That's what algos do. But no one's really, excited about the market, and nobody's certainly complacent about the market. They're just apathetic about the stock market. I don't know one single neighbor who's asked me about the stock market. So believe me when I tell you, that's behavioral finance, and nobody cares about the market. And they all think they're all dying except their 401ks are going higher and hitting till they get their next statement, right? So that's what happens. So from a standpoint of this type of volatility, that's exactly what's going on. Now you're watching this here. It's over the VWAP, and you're going to see it hit this fib. So anyway, so this if the market stopped here right now, absolutely nothing changed. And we're going to go back to the daily to take a look at that. One second. I hope some of this stuff that you're seeing in real time, and I'm sure explained in simple terms, is making some sense. Okay? Because I'm not here to teach you technical analysis right now. I'm just showing you why these things work the way they do. One second. I need to get this out.
Hey, Clue, do you trade futures?
No. I used to trade futures, and I will be trading futures again, but no, I'm not. I don't trade futures now. If I, I wouldn't get any sleep if I traded futures. In between keeping you guys entertained and thing, I mean, I would be just like done. I'd be burnt. But I will actually this fall start to trade futures, at least on days like today, because as you know, Corey, and others know too, that my skill at reading the futures is pretty damn good. So I see no reason why I shouldn't trade it. You know what I'm saying? But I do well doing what I do, so I don't really, go out there and dabble in futures. But saying all that, let's look at the daily and put things in perspective. So in the daily, honestly speaking, there is no technical damage whatsoever right now. The other thing, now it came back to me what I was going to explain. One second. This is really, screens are very sticky. I don't know what's going on here. I mean, it's just maybe there's so much activity going on. Okay. All right. So the body of this candle right now, it's a bearish engulfing because the body of this candle has is larger than this, slightly larger. But if they want to keep things somewhat sane, if let's say for example the body of this candle shrinks right now, futures are down 23. They were down. Hey Harry, you can listen to the first part of this when I upload the this webinar. So let me get the drawing tool. So let's say this candle right now, futures are down 22. Let's say futures are down 15, right? So the body of this candle will be what we call an inside day. It'll be like this in the futures market. You get it? It'll be within the body of this bullish. I mean, this was monster. This was a monster. I did expect it to happen, but not in one day. All right. But I did mention to people, if you remember, that we'd probably test this level at 18,000 prior to the Brexit. So it could be a big manipulative move to prop up prices so that when we did drop, it didn't hurt as much. Did you understand what I said? Markets do a lot. You know, the so-called invisible hand of the market does that a lot. You move things up, so when you drop it, it doesn't hurt that much because it's at such higher level, elevated levels. Did you understand what I just said?
Yes.
Very simple to understand. If you move something up like this, like today, right, and you drop it halfway, or just, you know, or 3/4, for the investor, whoever bought like a couple of days ago or bought in the open, they're still up. So I wouldn't be surprised if this candle right now, futures are down 23. It's like all over the place. But as you can see, the structure is not all over the place. It's very structured what's going on here. And that's what I'm trying to impress upon people. You got a big fat, looks like a Chinese firecracker, right? Big fat reversal candle. And as long as this reversal candle, this is how you should remember, remind yourself. If this reversal candle is not snuffed out below, let's say this point here, which is quite a bit, that means futures need to be down like 35 points or 40, then we're okay. If we break this hard tomorrow morning, you will have to literally take all your longs and go short for the following week. And that's only if I see a reversal of a magnitude. Now, this doesn't mean that we're going to open low and keep on going lower. Opening low, shorts are going to cover. I'm going to sell my, few hedges that I have, S&P puts. It's going to look really good. So there's a little short covering rally, but then they'll hit it. And if we cannot enter the uptrend line again, then we'll fall. And the next level of contact will be this neckline that I've spoken about many, many, many times. So if we break the neckline, technically speaking, it's a broken, it's a failed attempt at that, and it's possible that we go a little bit lower. Nothing changes. I mean, nothing dramatic, but you got to respect what the candles are saying. You got to respect what the patterns are determining. So right now, it's a bearish engulfing, holding the 50 and the 34, holding the uptrend line here at this level. But like I said, if I see the pattern totally change middle of the night or tomorrow morning, anything. Remember, the final results don't come out till 7 or 8 a.m. our time, right? So it'll be before our markets. That's the true determination. Now, I think there could be a bear trap in the futures market to do the same stuff, except big money's playing around today, is what if most of the bias is mostly on the leave side, on all the smaller counties and all the smaller little cities and stuff, and then comes London and the surrounding cities where most of England lives. I'm sure many of you have been to the Great Britain. You know that 80% of or what is it, 60% or more of England lives in the south, right? London itself is a huge city, and all the towns are around there. So the south is really heavily populated, not the north. So the bottom line is that the northern part is where the English northern part, not Scotland. Scotland is very EU, pro-EU. But the northern part of England is where most of the industrial areas are. These are the people who have been disenfranchised and affected more with globalization, and all the mills have been shut down and things like that. That's where really the brunt of the anti-European sentiment comes from, and or being part of the EU comes from. So the South, more technocrats, the bankers, the engineers, the doctors, and all that stuff. It's just economic stuff, right? They make more money, they're more comfortable, all kinds of stuff. So they don't want to, they're okay. So what I think is they might be setting a bear trap here on the future side, holding futures down 20 points, 22 points, 30 points. Then as the night develops, the bigger cities come in from the south, and they're all on the remain camp. Futures can turn around hard. As you can see, futures are turning around in seconds, right? So it can turn around hard, and we could open up, 10, 15 points. What I will tell you is where we are right now, we are basically, we need a little pause, okay? This is what I expected to happen. It happened. So, so this is the other pattern that you need to consider. Can somebody tell me what I'm going to draw right now? Somebody guess? No one?
Cup and handle?
Thank you. Thank you. Thank you very much. Who was that? Mary?
It's Mary.
Hey, Clue.
So one second. Let me finish. Let
Yeah.
me finish. So here's your cup, and the cup has been filled. It's filled. So you need a handle. Very important. A handle. And then if the market truly wants to break out, then, and I've explained this before, then you're going to make the move. Whichever the case, this scenario, whether or not Brexit or no Brexit, was going to happen. Okay, this scenario, not 30 points down in one night, but this scenario is just simple technical patterns right there. It is going to happen. No question about it. Brexit is just an excuse for it to happen, and then it moves. Corey, go ahead with your question.
Sorry, I was just watching on TV. The Nikkei was down over 300. Now it's down only about 30. That thing really came back.
That thing, yeah, that's because what we're going to see on the next chart is you're talking about the Bank of Japan intervening heavy. The history of the Bank of Japan intervening is world known. Okay, that's why Soros, Soros made his money in one day or 2 days. He made $1.3 billion back in the early 80s when he shorted the British pound. Maybe he tried to do that again this time. They will not let that happen. They have never forgotten what he did to England, okay? He broke the back of the British pound. The British pound used to trade at $2.50 or so versus the US dollar. A very expensive place at that point. Think about it, okay? In one single day, he broke the back of the British pound. The British pound has never seen $2. I mean, hasn't seen $2 in a long time. It's been stuck between 1.5, 1.7, 1.8. So a double repeat of Soros's short. Maybe he's very short the English pound right now. You know what I'm saying? Because that's what he does. Now, if we look at the 1 second, and what you said is a very important thing that you said. So what we're seeing here on a technical basis. This is an inside. This is exactly what an inside day looks like, or an inside candle. See that? Because we were in a very bullish pattern, right, today, which I was pointing out in my early morning. Oh, the early morning charts. Come on, how did this happen? There's way too much stuff going on. How do I close this? Ah, no. Okay, I guess we'll leave it open. So, okay. So you have again, pattern-wise, a very sharp falling wedge. Very sharp falling wedge always breaks out. Always. Any security you look at, you draw this type of falling wedge, you will start to see some sort of, unless there's a massive, breakdown on whatever the case, that's a different story. Here you saw a very steep falling wedge. I showed this, and now we broke out today. That's why the markets rallied big time. Remember, a weakening yen. It was 106 yen to the dollar. Within the past 2 hours, it went down to 103 yen versus the dollar. This is exactly where the Japanese Bank of Japan intervened. And they won't tell you, oh, we're intervening. They just do it, okay? And it's like it slaughters the shorts. So they're in. And as long as it stays in this pattern, we're okay. We're okay. What it can't break is this one, today's low, tonight's low. Because anything below 103 or 102 will trigger automatic intervention, Corey. Okay, just so you know that. And they will do it. And they have hinted at doing that. And that is a currency shorters or a currency trader's worst nightmare if they're short. Because when the central banks come in against you and start intervening in the market, intervention, it is extremely powerful. It's like a tidal wave that'll sweep and just drown you. So that's pretty much what the story is happening right now in front of our eyes. And there. So that's your intervention levels right here, and that's where we are right here. So Nikkei is now, one second, check this quickly. I'll go over two other quick things.
Assuming that Britain remains in the EU,
Yeah.
and it's all counted up, is this basically just going to be a moot point tomorrow, and the market just starts then basically going up because that uncertainty's out of the way?
Well, first of all, let's just look at it the most simplistic way. There is so much fear. Look, futures are down 30 right now. There's so much fear in the markets about this Brexit thing. A significant amount of companies too are hoarding cash, right? Because they're not quite sure what the implications could be. Singapore already has reported that if Brexit does happen, they will cut all, they will cancel and terminate all trade agreements with Britain, and they have to renegotiate new ones. It's a systematic failure of a lot of stuff, right? So this is what worries the markets a lot. This is what worries the structure that's out there. Negotiating trade agreements and stuff is not like you just walk in the park, right? You fight hard to make sure that you get the up, that there's some sort of fairness. Look, the word fairness is a myth. What's fair to me and you is not fair to the other person. What's fair to them is not fair to us. I mean, just think about it from a philosophical standpoint, right? So when people say, oh, we need to have a really fair trade agreement, there's nothing called a fair trade agreement. It's called something that's give and take where maybe you're not, it's not lopsided too much. So just remember that. So the bottom line is that if Remain camp stays in play, it will be a relief rally of a certain magnitude, but then at the same time, it'll be a huge relief rally for your favorite sector, Corey, banks. Okay, banks, as you clearly saw what was going on with Goldman Sachs. I mean, they just couldn't wait. They just kept on buying it and buying it and buying it. So the European banks and the large money center banks with global operations in this country, they will be the biggest part. So of course, that's going to spark off a bigger rally on the S&P 500 because I believe financials are 17% or so of the index, right? So yes, it will be very positive for financials, to be honest with you. Because if you really think about it, about biotechs and all that stuff, who cares if Brexit happens or not, right? Of course, they have certain implications because currencies will be lopsided. The British pound maybe falls apart. The US dollar gets stronger, all kinds of stuff. So that might affect transnational mergers and acquisitions. But in effect, if you really think about it, what does the biotech sector have to do with? They're not really, yeah, they're selling drugs overseas, but most of the money is coming from here, right? So the biotech sector, in my opinion, is somewhat, I hate saying this, but somewhat of a safe haven during these times because they've been clobbered. All of the charts are like pretty much coming off the lows, right? None of them, So the biotech banks would be very negatively hit if Brexit happens. No question about it. Technology, momentum stocks, they'll get hit, but honestly, their operations worldwide don't really change. Banks have serious implications if a Brexit happens because a lot of these trade agreements and this and that, affect financial institutions. Do you understand that?
Yes. Well, would it also be that if they do exit, shouldn't you see maybe some hedge funds maybe blowing up, which causing the market to even fall further?
Yeah, absolutely. Absolutely. But then look at the flip side too, that the US, whether one likes it or not, well, I like it, becomes a safe haven. So money does flow to the US. Unfortunately, the initial blast of money will flow into the safe haven, which is the 10-year Treasury bond, right? Which at which point that'll basically just jump up on price, and the yields are going to fall like hard. So the yields which closed today at 1.74. Remember the TNX, I've shown that it always rallies off the 1.6, 1.5 level. I showed that a couple of days ago, and that's exactly what it did. That's exactly what it did. So this is the chart that I showed with big letters saying, and if you notice, that's exactly what it did. It hit here, and it started to take off, right? And it's almost crossing over to the level where it gets overbought, which is 1.8% or so. So unfortunately, if Brexit does happen, a significant amount of money is going to flow into treasury bonds, depressing yields further down. Get it? So there's going to be money flowing out of the stock market, trying to hide in the bond market. It's a tough call, but I think a lot of the Brexit fears have somehow been taken into account. People might say, well, how can you say that? The market's hit a new high. But here's the difference. And let's be fair. Markets hit a new high, close to it, right? Did stocks hit a new high? No. Like Corey sometimes asks me, hey, market's rallying like crazy. Why isn't that stock up? Because it's not as correlated to the market as it used to be. Now it's sector by sector, or sometimes stock by stock. You guys all understand what I just said? So it is it's a very segmented market. So when it says, oh, market a new high, so an average person on the street thinks, oh, everything's at a new high. I can show you dozens of stocks which are way off their highs, dozens of great biotech companies that are way off their highs because of pressures, political pressures, Hillary Clinton mouthing off about drug price thing and this and that, the fear about Medicare caps, which for this year was removed, but next year is still in play. The transnational mergers, international mergers, which are frowned upon, things like that. FDA, being somewhat tough on some of the companies in improving their drugs. So biotechs, they're not highs. The energy companies are not at highs. So what gives? So it's not like when people say the markets are high like the old days, that means everything was higher. So that's why I'm saying it's really a sector play, but financials unfortunately will be the biggest hit. And then there will be peripheral effects across the board. Now it doesn't mean Amazon can't fall 20 points. Actually, want Tesla to fall 20 points because we're short. We bought those lottos, and I think tomorrow I'll get paid even if we open down 10 S&P points. That should be at 190. But what I'm saying is that right now, as we see the market, and I just want to show these internals a little bit, we are having, and this is what I was saying earlier, we're having the fastest reset that I have seen. Daily resets don't go like this in 1 hour. If you all notice, look at that. It is, I mean, it goes, if we're down 50, if we're down, let's say 45 or 50 S&P E-minis, futures are down like 50, we'll be down at 20, screaming buy. Now this is a daily chart. That's supposed to be for swing multi-week players. Let's look at a 1 hour. The 1 hour already, wow, down 30, 34 again. Look at that. So the 1 hour this is what we call a positive divergence. We hit watch this carefully, okay? This is what a positive divergence looks like. I've shown these two before the market ran. So here is what the bottom was hit, and the futures were at 2089. Okay? We have futures are now at 2073, but look what's happening to the internals. They are higher. So a lower price point, higher lows on the stows. That's a positive divergence. What this tells me, that within the next, I don't know, 10, 15 minutes, we're going to be back up 15 S&P points, and that would bring us up to down 15. In fact, it'll probably happen faster than you can think. So all these things basically are at play right now, and you can't, it's unquantifiable, even though I can make some structure out of it. Like I said, there's a lot of pressure going on, but this positive divergence is telling me that, yeah, prices can slip right now. We're down 34 points, maybe, down 37, 38. But if this stays like this, the sharp players are actually buying the lows or dollar cost averaging down on the future side, because when this springs up, this will act like a little coiled spring and move back up towards reclaiming the 34 and the 50-day moving average, 3450 SMA at around 2089. Now, for the next 5 or 10 minutes, I'm going to leave it open for questions because I think I've covered the basic grounds of what I think might be going on. And I do want to show this before I do that. I want to show you the picture of the S&P 500. And I do want everyone, maybe early tomorrow morning and stuff, because now it's late, or if you're in the West Coast, it's actually early, do go through all the charts. I mean, I get passionate about it because I want everyone to be kind of on the same page. I don't expect everyone to understand charts like I do. Some of you are, probably look at things better than I do, and I mean it. And but what I'm saying is that my charts are uncannily accurate. And I'm not a big-time bullshitter, so I'm not going to tell you like, oh, I follow them just like, like a robot. Yes, I do follow them, and sometimes I wish I followed them more because my profits are decent, very decent, but I could have really indecent profits, honestly speaking. But as a disciplined trader, I like consistency in my business. So I reach a certain amount, and I don't push my luck too much. But sometimes I should just get aggressive and say, listen, I want indecent profits. I'm going to leave that core position on price line from all the way down, all the way up, because I know it's going to go there. And believe me, there are traders in the Clueless Day trading community who have done it before and who are still doing it. They literally buy those inflection points, and despite the zigzags and all that stuff, they don't sell till where I show on a swing basis where it can go. Now, with smaller amounts of money, it's easy to do, right? You got a large position and you're up a fat bunch. You wake up the next morning like we did on Wednesday, Red Wednesday, everything's upside down. You know it's going to get there. You just don't know exactly when, and then today happens. So that's why I say always take partial profits. Don't bail out completely. When some members ask me, well, do you think the swing trades in its word? I think certain swings are intact. Now, will it not be held hostage to this type of volatility? Well, tonight it's an extreme. Of course it will. But the overall pattern doesn't change. That's why I started to stay as disciplined, and I kept on saying upside intact, upside intact. Many of you who did listen to that, what can I say? You sold this afternoon. It was shooting fish in a barrel. Hundreds of fish in a barrel. Okay? So that's what I try to say about disciplined trading. Yes, there'll be days it's going to be hard. But when the rewards come, it's just raining. And that's when a lot of people come in, including some of our members. Oh, yo, what am I looking for? What, is this too late to buy? I mean, what do you mean too late to buy? I've been giving it for a week now. And when it's up 15 points, yeah, it's late to buy. But that doesn't mean it's not going to run up another 5 points. I have a little bit of Amazon left, but most of my Amazon was sold around, what, 717 or so, because that was, or 720. And Amazon, 715, I sold a bunch. What was Amazon's run up? Amazon ran up because my profits were pretty decent, so I didn't want to. Amazon high was 722, okay? So most of my selling was done around 718. So why didn't I wait around for 4 more points? I left a little bit out there. I mean, that's just the way I do it. But honestly, my charts are so uncannily accurate, and all of you can look through it and you can say it to yourself. I'm just saying it as a person to person, that if somebody was truly mechanical and followed this, they would be minting money right, left, and center, both on the long side and the short side. Because when I show these consolidation channels, they fit perfectly. And they bounce off. Look at this uptrend line. I didn't do anything magical here. Uptrend line consolidation channel. Look at these points of inflection points here. Each inflection point is hundreds of dollars, if not thousands of dollars in your pocket, if you play it correctly. Now, just because it's an inflection point doesn't mean that it's not going to have a red candle along the way. This had a nice reversal candle. The next day it's here, and then it has a nice little pullback. So if you start freaking out on every little pullback without really understanding that these lines are still moving higher, that these stochastics are still moving higher, look at this. It's a beauty. And I keep on saying, follow the internals. Then you will never hit the jackpot. Because it's not that we're hitting jackpots. We're actually hitting small jackpots every day. When you're playing option stuff, you shouldn't be happy with 10%, 20%. Why take the risk to make 20%? Doesn't make any sense. Yeah, sometimes you can. If you have larger money involved, 20% is 20%. If you have $10,000 in a particular call series and you're up 20%, that's $2,000. Okay, that's $2,000 that you can take off the table. But this is what I was getting at. So whether or not Brexit happened or this push happened or not, we went straight on the daily. We went straight into overbought territory. I don't hanky-panky too much on this. This tells me that's probably got another 48 to 72 hours left before the market has a corrective pullback. Now, corrective pullbacks don't have to be all the way down here. Okay, these type of corrective pullbacks are beautiful buying opportunities. I said that. I said that on the 13th last week, right? And I kept on showing this thing here, and some of you who tracked it stayed with the long side, because this is not a joke here. Despite this fallout, there was a positive divergence going on. I am sure all of you remember, because I write it down. I mean, I can't get any more first grader than that. I write it down, positive divergence, where the internals are sloping higher while prices are making a short-term low. And then comes a big fat candle. So predictive analytics comes by looking at these very simple things. And then it took off, took out the 34 and the 50, and kept on going. Okay? So at this point, 2120 on the S&P, to me, it's like, come on, give it a break. Okay? Now, give it a break doesn't mean the whole market's going to collapse. It simply means that if you're trading the indices or you're trading stocks which move with the market, you want to ease back, not like aggressively short. I learned a long time ago, don't short uptrending bull markets, because that's exactly what the market is. Let's see what happens, if this changes the trend, but very difficult to do. Consolidation moves, absolutely. So here's a cup, create a handle, which would be good for 200-300 points, not the end of the world. It simply means, again, reversion to the mean. Markets can easily come back to 2080. That's only 180 points, 200 points. Yes, individual stocks fall a lot more when markets fall 200 because of the involvement of large-scale hedge funds going back and forth like wild monkeys. I mean, those guys really, they move up stocks like, Corey's favorite stock, Allergan, right? I like it too. Great company. They move Allergan around like it's a little penny stock. It's like stupid. There's nothing we can do. We have to live with it. They'll move, wow, futures are down 44 right now, and so that's it. So at this point, it's really an unknown what's going to happen tomorrow, but whatever happens, I can assure you, we'll try to make some money tomorrow, but the initial long positions will take a hit. Some of us who have some hedges, it'll be like a lottery ticket. Okay, it'll be like a lottery ticket tomorrow morning. So at this point, what I think the market wants to do in one night, which would really be amazing, but I'm not amazed about anything about the market. I mean, if weird things came out of my screen and started walking on my desk and stuff, I wouldn't be worried. I wouldn't be amazed at all, because it's just bizarre. Because that's what the machines do these days, right? So I think what the market's trying to do, to be honest with you, we could be down 60. We're down 44 right now. As in E-minis, we would basically reset down here, which would be another screaming buy. I'm telling you right now. And that reset would most probably be if we break below, I just explained all that to you, This is a bearish engulfing, if you ever saw one. That's a bearish engulfing candle. Not the end of the world. Okay, bearish engulfing. So coming down to the lower Darvas 2038, 2061. That's another what? 24 points, right? So imagine futures down 60. They'll probably halt the market. Whichever the case, looking at the technicals here, we're going to get so oversold that there will be choice companies you could basically just buy at bargain basement, because whichever the case, Brexit or no Brexit, the US is the ultimate safe haven. And our companies, other than the financials, the banks, which will take a sharp hit, but the biotech side and select technology stocks and such, what do they have to do with it? Got it? Because their trade agreements and stuff with Europe and Asia and stuff are not going to change. Our main growth business is actually coming from Asia, not from Europe. We know that. Asia is not changing the trade agreements and stuff because of Brexit with us. So in reality, that's that part of the business doesn't change. So anyway, you can see what's going on. I mean, one single couple of hours, we're down here. So any quick questions, because I want to wrap up.
No, we're good. It's getting late. Thanks.
I know, but I hope some of the stuff that I talked about, and this is the bottom line inside story of what really goes on, really, you know, I hope that you found helpful, but all of you found helpful. And more importantly, don't rely on just oversold over it. When markets go maniacal, just have to let go. Just sit back. And unless in one big morning, unless somebody's a fast trader, do not attempt to trade S&Ps and all that stuff during the day, because they move so fast. And if you don't have the right charts to watch, you're going to be done. So
I agree with you 100%.
yeah, and I've always warned people on that, because I'm looking at 7 different charts and I rely on 2 primarily. The Thinkorswim here and then my quad HFT charts. Without those 2 things, I'm flying blind. So I can imagine somebody trying to look at some other platform or not looking at a chart, trying to trade the S&P. It's like, whoa, hold on a minute. It's like putting you behind the 600 horsepower car with a blindfold on, you know, and you're supposed to feel the road. Wow, futures, it's like a straight line down right now. Look at that. So whichever the case, I can assure you guys one thing. I'll be up early, and I still think that my game theory, last thing I'll leave people with, of this being a bear trap in the sense that they're sucking things down right now, and then when the latter part, the more populous counties and the towns and cities start reporting their polls, which are more, you know, wealthier, and they want to, you know, they're more Eurocentric, or not just necessarily Eurocentric, they don't want to break away from Europe. When those start coming in, that's when the jam session starts on the, you know, as in upside. Because when you're down 43, it could be a mass. It doesn't take much to light the fire of the short squeeze to bring futures down 5, 10, 15. So saying all that, I'll be there tomorrow morning. Yeah, go ahead, Corey.
Hey, Khalid, one last thing. Are
Yeah.
you going to buy stuff, you know, pre-market if you see stuff in your favor?
How
No?
the heck do I know? I just explained to you. I am going to rely on what I see tomorrow morning. If I think I can get, no, that's a good question. And I'm honest. I mean, I don't, see, this is the thing. I don't pre-plan things. I pre-plan things in a somewhat of a rational market. This is an irrational market that we're seeing. Okay? So in an irrational market, what you do, just like in war, is you sit back, you basically survey the landscape, you look at your battle plans, and you attack. If I think that something is cheap, I get in there, it can take one more leg down for no other reason other than, like you correctly pointed out, a couple of smaller hedge funds blowing up in one night. You know what I'm saying? So I don't make, oh yeah, do I have a checklist of companies that I would love to buy cheaper? Absolutely. And we do that normally anyway during these tactical pullbacks. So tomorrow morning, definitely going to survey the landscape. We're really falling right now. We're down 48 points on the S&P 2058. I like this reset. I think we get to a point where it gets so cheap so fast, and Corey is right, we'll get some serious bargains, but we have to be very selective. Best way to play in these type of circumstances, if you don't want to do individual stocks per se, for people who play options, just stick with the indices. Just stick with the indices, okay? Because they're cleaner. There's no news, you know, we don't have, what do you call, event risk, in the sense that markets are great, then some bad news comes out on Google, stocks down like 10 for no reason while while the markets are up 100 points. So stick to the indices. But tomorrow's going to be great, and I'm going to be early. We'll engage. And guys, thank you for all the support. Spread the word, because these type of webinars and these type of critical times tonight, as we're seeing, do matter. And final view that I'll show you is what we talked about before, the daily. So as you can clearly see, as we head out, that we are still within that move. However, I do believe this is going to crack, and that would bring us to these levels here, and we'll see what happens. But they will fight. The algos will fight, because it's all pre-programmed, to remain within this rise, within the uptrend line, and possibly reclaim the 50 and the 34 back up. In other words, anything above 20, anything over 2080, 84, 2085 would be construed as a big win for the bulls on the future side. Got it? 2085 or so, 2084, 2085. Just write that down and remember that. All right? Because that would be considered the inside day. They'll run with it. But tomorrow is going to be very interesting, and like I said, I think earlier or a bit later in the night, early in the morning, when the big poll numbers come out from London and the surrounding towns and stuff, like they say, good old Jeeves is out there, right? He's going to be doing his thing. So guys, have a great evening. And we'll walk through this one like we have done many more. All right, but we need some expert help, and we'll certainly try to provide that as much as possible. And any other type of actionable information and stuff that you guys hear, please feel free to share it with us. All right?
Thank you, Cliff.
Thank you for listening. Bye-bye, guys. Thank you.